Okay, let's get started. So welcome to our Tuesday webinar, and today's topic is going to be on entity formation in the context of tax planning. So let me share screen. Okay. So our Tuesday webinar is normally given by our firm CEO Ying, but I'm doing a substitution today, like I did the past Saturday. Okay, so I myself is also a partner of the firm, Community CPA, and also I a PhD and a professor. Okay, so and then again, so this is our usual speaker, Ying, for the Tuesday and Saturday webinar. And so she's CEO of our firm, and she is sit on National Taxpayer Advocacy Panel, and she has written books on how to start and develop the businesses. Okay, and so we have this slide usually there for all our webinars. So we, so we encourage people to engage our services so that we can, take responsibility for all of the services that we provide. So otherwise, if you just listen to this webinar, that does not form any kind of a client relationship. So you are on at your own risk, relying on the information. Okay. So and of course that does not mean we are simply randomly putting the information here. So we do our the research to the best of our ability. So we the information they are accurate as to the best of our understanding. Okay, and so today, so as I mentioned in the beginning, so we're going to talk about the entity formations in the context of tax planning. So the year end is coming, so we still have a couple months, and if you wanted to make some changes to your business, you may still be able to do so in this year still. So we have a couple months left. All right, so let's first have a good understanding of the business entity types. So as legal entities, so we the most common business entity legal entity types are sole proprietorship, partnership, and corporation, as well as LLC. Okay, so I put the LLC separately there, just because so later when we talk about the tax structures, so LLC is a strange animal. So it's not like the sole proprietorship and partnership or corporation. So LLC is a legal entity, but it's not a uniquely defined tax entity. So LLC, so that's why I separate it out. And also I mentioned this is a common business entity type. So obviously you can have other business entity types, such as a trust. So some states actually allow trust to be a in many states actually. So trust is a private entity. You don't in the sense that you don't actually file any paperwork with the state, but some state actually require you to file paperwork with the state for a trust. Okay, so that's also a business entity type, and it can be a nonprofit, and there's a few other ones that can be a business entity, but they are not so common as those ones that are listed here. Okay, and then we're going to talk about and the focus actually of this talk is mainly on the tax aspects of the business entities. Okay, and so as a tax entity, so the classifications are a little different from the legal entities. Okay, so for example, so we sole proprietorship, so that's one type of tax entity, and that's a legal entity, but it's also a tax entity. And but so is small single member, not small, but single member LLC. Okay, so you see that the LLC sits in a few different places. In fact, in all of the places here. So that's why I mentioned, as mentioned in the previous slide. So LLC is a well-defined legal entity, so it's the one that you register with the state. But as a tax entity, it's not uniquely defined. Okay, so depending on whether it's a single member, it's a multi-member, or whether that LLC has elected to be taxed as either a C Corp or S Corp. Okay, so the common tax entity types are sole proprietorship, the partnership, C Corp, and S Corp. Okay, and LLC can be any of the four categories. So if it's a single member, you don't do anything. So then that'll be defaulted to be like a sole proprietorship. Okay, and then if it's a more than one member LLC, and then if you don't do any elections, so then by default rule, so that'll be like a partnership. Okay, but you could also elect your LLC to be taxed as either C Corp or S Corp by filing some other election forms, okay, IRS election forms. And so next, let's go through those tax entities separately. Okay, so as I mentioned, so because LLC is not a uniquely defined tax entity, so we'll leave that to the last. Okay, so let's look at the other ones first. So we begin with sole proprietorship. And so for a sole proprietorship, so basically it's just yourself. Okay, so there's no formation with the state or registration with the state is required, and so it's not a separate entity from yourself personally. So that's good or bad. Okay, so which we'll talk about. But anyway, so that's what a sole proprietorship is. It's just basically you yourself doing business, doing whatever kind of business that you want to do. And very often, though, you do file a business name. For that you don't do with the state. Okay, so and you typically do that with a county office. You file a piece of paper to adopt a business name. But that does not make it a separate legal entity. It's still yourself, and you just have a business name. All right, and then for a sole proprietorship, you do not have to apply for a employment identification number, an EIN, because you have because a sole proprietor, it is yourself. Okay, you already have a tax ID, which is your Social Security number, so you are not required to have a separate EIN. But because you're running business as a sole proprietorship, then there are many instances some other party will ask you for your business tax ID. And you don't want to just give your Social Security number to anybody that asks for it. So for obvious security reasons or ID theft protection, okay, so you don't want to just give out your Social Security number that easily. And so what you can do is simply apply for an EIN for that purpose. So and you can apply for EIN. So once you have the EIN, then when you issue W-2 to your employees under your sole proprietorship business, and so you can, for instance, put that EIN there as an employer's tax ID instead of your Social Security number. Okay, and or whatever application, for instance, you apply for setting up an account with a vendor or supplier, and you can give them that EIN instead of your personal Social Security numbers. Okay, and the way to apply for EIN, and you can do it online, and you can also do it by fax or mail, paper mail. So it's obviously we have been in the information age for many years, so that the applying online is the preferred way for the majority of us. But there are people still prefer the old-fashioned way, so by the paper mail or by fax. These are still, as of right now, are still accepted by IRS. So that the IRS may abandon altogether the mail and the fax at some point in the future. But as of right now, we can apply online, by fax, or by mail. And also, if you are an international applicant, okay, so wanted to do business in the U.S., okay, so you could also apply by telephone, apply for EIN by telephone. And actually, I should say that apply by telephone, that's not just limited to international applicant. That's a method that can be used by domestic applicants as well. Okay. So now let's mention a few pros and cons for running a business under sole proprietorship versus the other types. Okay, so we haven't talked about the other types, but so just quickly mention some of the disadvantages, and that's the reason why we would consider putting your business under the other entity types. Okay. So the good thing about sole proprietorship is obviously it's easy to set up, and in fact there's no setup. And sole proprietorship just simply is you yourself running the business. There's nothing to set up. Okay, and so you have 100% control because you are the only one operating the business. You may have employees, but you are the only one running the business, and so then there's no double taxation. That's a concept. When we get to C Corp, we will talk more about that. But I guess no double taxation is not so clear in the sole proprietorship case. Okay. Also, there's no separate tax return, so you just still file your personal tax return. As I said, so a sole proprietorship is just yourself, and there's no separate tax return to be filed. But there is a separate form or separate schedule that's going to be included in your personal tax return, which we'll mention in the next slides. Okay. So, but anyways, there's only one tax return with a separate schedule, with an additional schedule, I should say. Yeah. All right, so what's bad about sole proprietorship is because it's you yourself running the business, and so you are also carrying all the risks. So if your business for whatever reason owes another party money, for example, could be owning some other your customers, and maybe you did something wrong. Or if you are running a restaurant and somebody there's a slip and fall claim and things of that nature. So whatever liability you run into under your business, and because your business is you yourself, so then all of the risk you're taking them on personally. All of your personal assets are at risk when you run your business under a sole proprietorship. Okay. And also that structure makes it difficult to grow because you cannot add another partner, you cannot add another owner. And when you add another owner, so that's no longer a sole proprietorship. Sole proprietorship, it means there's only one owner. Okay, and so also you will be paying self-employment taxes on the net profit, because net profit is considered your employment income, so you will be paying employment tax on that. So that's also the reason why I'm saying the no double taxation part is not so clear in the sole proprietor context in the sole proprietor case. All right, for tax filing, as I mentioned earlier, so there's no separate tax return that you need to file. You just file your personal tax return, but there is a separate schedule that's going to be attached to your tax return, your 1040 personal tax return. So there is a Schedule C on which you report all your business income as well as expenses. and then you calculate the net income, and so there's those will be entered into the main form 1040, and then to cash, so then your tax liability will be calculated. Okay, so there is a line for you to enter your the EIN number I mentioned earlier, so you can apply for an EIN for your sole proprietorships, and there's a place for you to enter that number on this Schedule C. Okay, and there's no place for you to enter on 1040 because 1040 is your personal tax return. But on this attachment on this Schedule C, there's a place for you to enter the EIN if you apply for one for your sole proprietorship business. Okay, so the next entity type, the tax entity type we want to talk about is C corporation. Okay, so a C corporation is taxed separately from the shareholders, from the owners. Okay, so in other words, the C corp reports and it pays its own taxes if it owes taxes, and obviously you have to calculate just like personal tax return. And if you made money and you have a net income, so then you would be subject to taxes. So in the C corp, you will be paying taxes. And so the way to form a C corporation is you first incorporate with the state. Okay, so typically it's the Secretary of State for office for most states, and in some states it's a different government agency within the state that handles the corporation. But for most states it's the Secretary of State office. So you basically choose a name, make sure your name is not taken. So I should mention that unlike sole proprietorship, because there may be 500 people with the same name in your state. Okay, but if you want to incorporate a company, basically a C corporation, then and that name must be unique. The state does not allow two companies to have the same legal corporation names. Okay, so that's why I mentioned you first have to choose your corporation name, so which will be unique in that state, and then you incorporate with the state by filing articles of incorporation. And if you want to do your business under a different name, under a name that's different from the company's legal name, and you can also file a fictitious name. And in fact, you can file multiple fictitious name resolutions if you want to conduct your business under a few different names. If you, let's say you have 3 lines of business, so maybe a restaurant is one, and then you're also doing something else, so then you can have a second line, and then you have a different second name under that same corporation. Okay, and then so if it's a corporation, so then you will have to. So unlike the sole proprietorship, and that's optional. Okay, so as a corporation, you have to apply for a tax ID, which is Employer Identification Number, or EIN, and you can do this by online, by phone, or by fax, and so you can apply for a EIN that way for your company, and then. To file tax returns, so you need to use a separate tax form. So there's a Form 1120 to file a C Corp tax return, and so then you need to enter your EIN, and then you report the company's income and as well as expenses. And also for a C Corp, there are a couple pages which I didn't attach. You will be reporting on annually your assets and the liabilities as well. Okay, so that's not something you do on your Schedule C, but for a corporation, you have to report those assets and liabilities as well, in addition to your operations, your income and expenses. Okay, that's how you file a C Corp tax return. And so there are some pros and cons I want to quickly mention. So obviously, because it's a separate legal entity, So the risk to your personal assets are limited. Okay, so if you are the shareholder and you are running the business under a corporation, and so then if there's any liabilities from the business, which will be limited to the corporation, generally speaking, and your personal assets will not be typically will not be affected. Okay, and on the downside, there is more paperwork, and for a corporation, there's like an annual meeting and things like that you have to update, and then there's an annual or biannual report you have to file with the state. Okay, so otherwise your company might be administratively dissolved by the state if you overlook to file a annual or biannual report with the state office. Okay, and so there are more regulations, so you have compliances you have to follow, and also for C corporation, there's the so-called double taxation if you decided to distribute the company's net profit to stockholders. Okay, so you have to pay, the company will have to pay taxes at the corporate level if there's any net profit. That's before you distribute the dividend. Okay, so the dividend does not affect your tax liability. So if you have net profit before dividend, then the company will have to pay a corporate tax on that net profit. And then if you choose to distribute the company profit to stockholders, then stockholder themselves will also have to pay personal income tax on those dividends. So these are the dividends passed on to the stockholders will be their additional personal incomes that are subject to taxation. Okay, and the next tax entity is an S corporation. Okay, and so S corporation is not a state level business entity type. So if you go to any state website, so in Iowa, for example, that's Secretary of State, and you try to look for incorporation of a S corporation, okay, so then you're not going to find it because S corp is a tax entity concept. It's not a legal entity type. So what you do is you form a corporation, just like a C corporation. And so then you do certain things. If the corporation meets eligibility requirements, you can do an election to make it a S corporation for tax filing purposes. Okay, and so there are some eligibility requirements. Okay, so not all corporations can make the election to be an S corp. So most notably, so there cannot be a corporation cannot if you want to elect to be an S corp, the company cannot have more than 100 shareholders, and cannot have more than one class of stocks. So unless you have let's say two or more classes of stock, the only difference between them is voting rights, so that's allowed. But generally speaking, you are only allowed to have one class of stock. Okay, and also the shareholders, they need to be individuals, and even individuals, they cannot be non-resident aliens. Okay, and also the shareholders can be certain trust or estates. There are many different kinds of trusts. Okay, so some trusts can be S corp shareholders, some cannot. Okay, and also the shareholders cannot be, okay, because I didn't list them here. So S corporation shareholder cannot be a corporation or or entities of that nature. Okay. All right, and so in fact I already mentioned earlier. So the way you form an S corporation, the first few steps is just like how you form a C corporation. Okay, and including the applying for EIN part. Okay, you do the same EIN application, and the only difference is the very last step here. I probably should have made that a separate bullet point, because that's not part of your election, the EIN application process. Okay, so you do actually indicate in your EIN application process whether you want to be a C Corp or S Corp. For instance, you indicate to be an S Corp, but you do not make that election in that application process. Okay, so the election to be an S Corp, the last step here is a separate step. Okay, and you use IRS Form 2553 to make an S Corp election. So that's how you make S Corp. Okay, and the tax return for S Corp is there's actually a separate tax return you need to file. So that's on the Form 1120S. And it's different from a C Corp 1120 in the sense that you actually only do the calculations, but you do not, on this form, it does not calculate the tax due. Okay, so basically, there at the end of the tax form, there's a net income or net gain or net loss. That net gain or net loss will be passed on to the shareholder's personal income tax return. So there's no, there's a corporate level tax filing, but there's no corporate level tax determination or tax liabilities. So all the taxes are settled at the personal level. That's the difference between S Corp and the C Corp for tax filing. So some of the benefits of a S Corp is that so it for tax obligations you can so there are probably less I guess it wasn't clearly mentioned anywhere on the slides, but so if the company makes money, there's a net income. So that net income, depending on how you treat that net income, some of that you can pay yourself as salary, so then that would be subject to employment taxes. But some of the net income is passed on to you personally as a distribution, so then the distribution is not subject to employment taxes. That's one of the big savings and you can have on the S Corp when compared to a C Corp, for instance. Okay, but C Corp does have its own benefit, especially when the company is making a lot of money. So there are, you can set up a lot of benefit packages. Okay, so I guess that's outside this slides. So that's more like a general comment. Okay, so between C and S. So it's for a starting business, S may be the preferred type, but when the business grows, C might become a more preferred business type. So that's why you need to do an annual reassessment of your business situation, and then you can decide what you want to do for next year and even for the current year. So, for instance, maybe there for 2 months left, maybe you can form a C corporation and then to put some of the benefits under C corporation, so give you some flexibility. And also, in some cases, you can even backdate your corporation to some earlier months of the year, and so things like that you may still be able to do for the current year. All right. Okay, so that's some side comment in the context of the tax planning. Okay, so let me finish the talk with some discussion of the strange animal I mentioned in the very beginning, the limited liability companies. Okay, so a limited liability company is a legal structure. Okay, so if you go to a state website, and you can form your company as a corporation, as a partnership, or as a limited liability company. Okay, it's a legal structure. And so the way to file that is, just like a corporation, you make sure the name is unique, and so you have to choose a name, and no one else has taken, and you file an article or certificate of organization, and then you apply for a EIN number. Okay, and so now so that's basically how you form an LLC. Okay, and let me see. For tax filing, depending on the situation, so the LLC can be, I mentioned earlier, can be a part of your personal tax return. If it's a single member, SM stands for single member, and if you don't do any elections, so then you just file that as if it's a sole proprietorship. Okay, and if you have multiple members, it's a multiple member LLC, so then you file it. If you don't do any election, you file it as a partnership. That's on tax form 1065. And so then you can also make an election for your LLC to be taxed as either C Corp or S Corp. Okay, so and there's a Form 8832 for you to classify your LLC as the type of entity you want to be taxed. Okay, the type of entity you want to be taxed. Okay, so that's how you file that, and also actually you can actually also use the 2553 Form 2553 to elect as a S corporation. Okay, so and I guess so that should end the discussion. So I guess there are several different tax types you can run your business under, and then they each have its own pros and cons. So there's no unique answer. Say, okay, so this is definitely the best type. Okay, so depending on the situation, and one type may be more beneficial to you than others, at least tax-wise. Okay, and then every year your business situation is different. And or even the first part and second part of the year, maybe situation may be different. So you want to reassess your business situation regularly and at least annually. So that toward the end of the year, that's typically the tax planning season. So we actually do provide a tax planning service to our clients. And then if you want to take advantage of some of the reorganization for this year, for the current year, year 2021, and you want to do that as soon as possible, so that you still have a couple months to play with for the current year. So and maybe in some cases actually even go back a few months, or even go back to January 1 in some cases to reorganize some of your business or tax plannings for the current year. And of course, you will get ready for the coming year, for year 2022. So that's what the planning is for. Okay, it's for the coming year. But there are some things you may be able to do for the current tax year as well. Okay, so that will end the content I'm going to talk about today. Oops. Okay. Yeah. So final words about our company. So you can go to our website, communitycpa.com, to check for our services, as well as find a list of our staff, and also the list of the webinars we've been giving. Okay. And so this one will be posted there as well at some point. And then we also post all our webinars on our YouTube channel, Community CPA's YouTube channel, that you can easily find. Okay, and so thank you all for coming to this webinar. Okay, so that we are running out of time. In fact, I have run over time already, so I will not be answering any questions. Okay, goodbye. See you next time.